Hi, my name is Jake Carricker. I do research and development here with Trading Blox, as well as help customers implement systems and solve coding problems and so forth. And I'm going to be doing a brief presentation outlining the equity system pack. So I will start out by talking just a little bit about why should I buy the system pack, or if you already own it, what's in it for you in owning this thing. What we can see is as we benchmark against the S&P 500 Total Return Index, over this time period, the system actually did a little bit better. You made 1% more, or almost 1.5% more than the index during that time. But the real dramatic difference was in the risk that you took to achieve that return. We had a maximum drawdown in this hypothetical back test of 13.7%, and during that same time, as you recall, since the mid-'90s, the S&P has had some harrowing periods, and at one point it was actually down 55% from a high. So you can see you've got a lot less risk there. We also like to measure risk in terms of annualized volatility or standard deviation, and once again, we're taking less than half the risk of the index to give actually superior returns, and all that's really encapsulated in the Sharpe ratio, which is a very popular metric that investment managers and investors typically like to look at, because it measures how much return do I get per unit of risk that I'm taking, and you can kind of do an apples and apples comparison between two investments or two markets and see what might be the better bet for your money, so that you get a smoother ride with better returns. And as you can see, we got more than double the Sharpe ratio over this long-term time period of the index. So that is really the bottom line.